and welcome to my Source Business Show, your go-to destination for all things business. Karibuni sana from wherever you're watching us from. This is PrayerCave TV, and we are glad that you tuned in today. Now, today we are so glad that we are talking about tax. We are diving into the world of tax, and we are going to look specifically at corporation tax in Kenya. What do you know about corporate tax? Are you a company owner, or are you intending to have a company in future? Are you aware of the corporate tax? That is what we'll be looking at today, and I'm so glad to have an amazing woman in the house. I am so glad that she is an expert in when it comes to tax, and I'm talking of none other than Dr. Regina Kingori, who is also the CEO of RWK and Associates, which is an audit firm. Karibu sana daktari.
Thank you sana, Doreen. Thank you.
Yes.
Yeah.
Karibu sana to our studios. We are so glad that you are here, and congratulations
Thank you.
on your achievement.
Right.
Yes.
Thank you so much. I thank God for this opportunity to come and visit PrayerCave TV again. I'm so happy that you invited me today. My name is Regina Kingori. The doctor is there.
Yeah.
I'm processing it also. And the CEO and of RWK and Associates is an audit firm. And we do tax audit and advisory, bookkeeping, accountancy, and so many other services, financial services. And I'm so happy to be here. Beyond that, we also have a CSR that we do, Skill Up Mentorship Program, that we help people attain practical skills that they can do and they can learn and do business. These skills are soap making, for instance, yogurt, cakes. So if you can be able to follow our pages, you can be able to learn and see. And also on social media pages, I help people achieve their dreams. I'm so passionate, especially when people are able to achieve business goals. Yes, so I'm so happy to be here.
Thank you so much. And now it's that time where we dive into the topic of today. And I was looking at reports just recently that 85% of the Kenyan registered businesses, they are not compliant to corporate tax. And just to begin with, just tell us what corporate tax is, and then we get into knowing why are people not compliant. 85% is quite a huge number. Yeah.
All right. Okay, so corporate taxes that we are remitted for business income. So if you have a registered business or a sole proprietor or an individual business, corporate tax is for you. So it's a tax levied on businesses on income that are generated from business on a yearly basis. So at the moment, how corporate tax is calculated is 30% on limited company. And I've also mentioned that we have individuals who are sole proprietors, we have SMEs, and mostly that is a place where they are able to handle the corporate tax very, very well. So when it comes to limited companies, you are supposed to recognize all your sales, all your turnovers for the whole year. Then you recognize your purchases, and then you recognize your expenses. The net profit, you charge 30%. So, for instance, if I give you an example, you're operating a hardware, and this hardware is limited company. You've gone to Sharia House, you've registered, so it is called, for instance, RWK Associates or Enterprises. I'm operating a hardware. So every month, there are taxes that I'm supposed to be doing. And also there we confused because there are taxes that are supposed to be done on a monthly basis. So if you're doing turnovers that are 5 million and above, you're supposed to be doing value added tax, that is VAT. And right now we are having ETIMS, that you're supposed also to be ETIMS compliant. So as a company, you're having the monthly VAT that you're doing. If you have employees, you're doing pay as you earn, you're doing housing levy, you're doing NITA, NHIF, NSSF. At the moment, there are about 5 for individual taxes. And then we have VAT. So those ones you're doing on a monthly basis. At the end of the year, that is when you're supposed to be doing corporate tax. So if you've been filing every month for your VAT, at the end of the year, 12 months, you bring all your sales together, then all your purchases and all the expenses. The expenses in a company are fuel, rent, salaries, office expenses. You bring everything together and then you charge 30%. That is for a limited company. If you're operating a sole proprietor, you do the same, but you're using your personal PIN. So you're going to do the graduated scale for the individual businesses. If you are operating a partnership, the partners, now when it comes to profit, the partners pay their taxes individually. So depending on the nature of the business, corporate tax has to be done. Yes.
What is the percentage of this corporate tax?
Okay.
Yeah.
So for limited company is 30%. Limited residential company is 30%. And we have now for individuals, these are people who are operating business names. You can even open a business name. When you open that business, it could be the same RWK, but it's a business name. It is connected to your personal PIN. So you're going to do business income the same way. Sales, purchases, expenses, and then you do graduated scale. There is a graduated scale for that, like the way we use pay as you earn. For partnership, you share the profits and then you pay the taxes individually. So still on the how you structure the business, there always a way to pay the corporation tax.
Amazing. What are the key aspects of corporate tax that entrepreneurs need to be aware of?
So there are several. First of all, when we talk about corporate tax and how to do it properly, most of the business owners lack proper bookkeepings, proper recording. Actually, that is one of the biggest problems. So, for instance, most of organizations, they are able to have a sales report because for sales, they are able to generate receipts. They are able to have a point of sale. So most of us, we concentrate on sales because you really want to monitor how you're selling. So we are able to really monitor sales. But when it comes to purchases, you find the owners are the ones that order via phone call. There's not even a document. Someone just bring the raw material, the product. There's no receipting. There's nothing. Yeah. Then when it comes to expenses, you're sending a border person. You don't sign somewhere. You're operating the business on your M-Pesa. An M-Pesa is a source of is a proof of payment. It is not a source document, even if you produce that M-Pesa receipt. Yeah. So if you paid fuel, you cannot say, I paid 5,000, so this is the M-Pesa receipt. No, you have to get the receipt from the petrol station. So when it comes to corporate tax, most of the organization, what they lack is documentation. So even when you're going through a KRA audit, because KRA will come one day and they'll ask you for questions, and possibly your business is even a loss, but you cannot be able to demonstrate that loss because you don't have records. Yeah. So that is one of the areas where when you talk about that 85% of companies are non-compliant, is because actually when it comes to documentation, we are really not able to do it properly. So the other aspects is if you're doing sales and your sales are above 5 million turnovers, are you able to do VAT? Because everything, all taxes come together. Yeah. The monthly taxes that we do come together to the yearly taxes. Okay. So you cannot say my income, my corporation tax, or when you're doing corporate tax, you say salaries, expense 3 million, and you don't have pay as you earn. So this one becomes a trigger that you're paying people, but you don't do pay as you earn. So everything, when you're doing those calculations, everything has to come together. Yeah. So the other aspect is having the calculation done by a professional. So we find so many exposures because you did not consult a professional. So sometimes you just tell somebody, file for me because it is June 31st, 30th, and you're filing the last minute. So they incorporate wrong data there. So during audit, they ask you, do you have rent? Yet you're operating that business on your premise, so you don't even pay rent. But the person doing the calculation has indicated rent. So having the correct person, you yourself understanding what is being done as a business owner is very important. Also something that we also do, we leave that calculation to a third owner, to a third person. Whether it's an auditor, you don't check, counter check. So also having so many problems when it comes to how you do presentations.
I heard you talked about bookkeeping, and now when a business is so young, you're like, what do I need the books for? I have it all figured out in my mind.
Yeah.
So you're saying that even if a business is small, a company is starting, you need the books, documentation.
Yes.
Wow.
Yes. Because every business aspires to grow.
Yeah.
You're not starting a business that is going to die tomorrow.
Definitely, yeah.
So when you're starting your business, it's very important for you to have records. And you don't have to invest so much on that. You can have a book, a simple book that you're doing your calculations. That book can save you a lot. So, and I always say when the business is very young, there's exposure. Most of the time, KRA looks for visibility. Is your business visible? Are you doing more turnovers? Sometimes people ask me, why is always my company being audited every year? It's visibility. You're doing huge turnovers.
Yeah, it can be seen.
It can be seen.
Yeah.
You're all over. You're all over on social media.
Yeah.
Your vehicles you can be seen. So, and when people are looking for tax, for instance, because even KRA works on targets and they don't have a lot of huge number of people to come audit every company, though every company should be audited within 5 years. So when they are looking for 100 million, they will not look for 100 million from Mama Mbogas. They will look for that money from established businesses. So when your business becomes visible, you're doing turnovers, you're doing 5 million, 10 million, now you're doing 50 million, you're visible. Now when they come, because you're visible, they'll not come for that year you're visible. They'll come for 5 years. So even that year that you're starting, they'll query that year. And that is the year you don't have correct books. Yeah. You just have bank statements. Some of you, they come to our organization for audit and they'll just tell you, I just have bank statement. And they only have bank statement because the bank maintains the bank statement. So they can get the bank statement from the bank. Wow. So it is very important. Even if when you're starting, it is a loss. Most of the business make a loss in the first year, but you have to demonstrate that loss. So you can, yes, you have to demonstrate. So you cannot say, my banking, I brought you bank statement. So bank statements gives me money in and money out. So money in, I can see 10 million the full year, but I can also see money out 10 million. KRA will consider money in 10 million and they will ask you, so that year you did 10 million. So where are your purchases? Where are your expenses? If you don't have, they charge 10 million, 30%. That is 3 million. And for instance, you made a loss. Yes.
Kindly explain to us how the current corporate tax rates in Kenya may impact different sizes and types of businesses.
Okay. So when it comes to corporate tax, it is constant. It depends on the profits that you're making. So the rates are constant. The only thing that I would say there are a lot of changes is on visibility. Is now KRA has brought in a lot of data enhancement, data intelligence to know your business, to know what kind of business you're doing, to know your turnovers. The e-teams efficiency is bringing a lot of change. The way we used to have a business somewhere, in the midst of somewhere, and nobody even comes to your business. They don't even understand what you do. You're selling, you're just saying KRA has never even Now those things are changing. There's a lot of data exchange. First of all, ETIMS now is a regulation that every business has to be ETIMS compliant, meaning you have to issue an ETIMS invoice when you're selling and receive it when you're buying. Meaning that ETIMS invoice is giving KRA real-time information about your business. It can say, today you sold 50,000. Tomorrow you sold 100,000. So visibility is now there. So at the end of the year, you cannot say, I'll not do corporation tax. Already they have your data that the full year you sold 5 million. So bring your documents. So ETIMS is a game changer when it comes to corporation tax. Then we also have a lot of KRA, a lot of surveillance that is happening. We have a team that is moving around. For the more than 10 years, I've been a tax expert. KRA has never been vigilant like they are right now. So we have a team of surveillance that are moving to business. So they'll come to your organization, they'll come to your business and they will ask you for documents. They will check your M-Pesa on the wall. They will look at the staff that you're having. So, and then they will ask you for the PIN number. When they ask for the PIN number, they find you've been filing nil. Yet you have a physical business, you have a till number, they can even count the staff you're having. So you cannot tell them that I've not been doing business. So right now the changes, corporate tax rates have not changed. But the enhancement of data of tax collection is so high that now every business has to operate differently. Yes.
Awesome. Are there any recent changes on our updates in the Kenya's corporate tax?
Okay.
Yes.
So mostly what we are having right now could be changes of now how we do different businesses. So sometimes you may find that there are incentives that are there. But your VAT, you can be able to be refunded some money. So mostly at this point, because the biggest change at the moment has been ETIMS, and the ETIMS is mostly affecting how we do VAT, but subsequently affecting how we do corporation tax, because it's the same data you're bringing to corporation tax. And also another big change that I would also want to mention that is coming with ETIMS is how we do our stocks. So stocks to a business are very important. When it comes to opening and closing stock, it is showing how much sales we have done in a year. So ETIMS, previously our ETLs was not able to even concentrate on how you do your stocks. But at the moment, you can be able to see how you're doing your stocks, because the ETIMS is a web-based, is a point of sale. You have to incorporate all your products and their stocks. So let me go back to my example of a hardware. So this hardware, their main component they are selling is steel or cement. So they buy that steel or cement to the business. You have to input that purchase on the point of sale on ETIMS. Then when you're selling, you have to indicate this receipt. Previously, someone will buy 50,000, you go to the machine and just key in the 50,000, it gives a 16% and you give out. But this now, you have to key in 5 bags of cement, 10 DR. You have to indicate all the stock that this customer is buying. Meaning that you're not only giving these ETIMS your sales, but you're also giving data of your stock. So meaning that you can no longer say that I buy. So because mostly what we used to do, and most organizations how they used to do, they buy very well. They buy through ETIMS, they are given ETLs, they come to the organization, they claim. They put all their purchases. But when they are selling, they don't sell the same way. So there are people you give ETLs, or those ETIMS, there are others you don't give. So at the end of the month, you purchase the goods worth 300,000. You have sold goods worth 250 or 200, so that you don't pay a lot of VAT. But yet there are other sales that you have made but not through the eTIM system. But now, because of the stock monitoring, at the end of the year, that's when now tax audits will come for corporation tax. At the end of the year, it will bring all that data together and say, according to your calculation and according to the data you've given us for purchases, for cement, you have bought a full year 10,000 bags. But when we look at your sales, you have sold 2,000 bags. So you have 8,000 bags you've not sold. So either you're under-declaring your sales or you have these stocks in your premise. Can we come even do a physical count? So eTIMS is doing a lot of change on how we do corporation tax, and that is something that people should be very sensitive. So even how you do your stocks is being monitored by a system. Yes, so you cannot say I'm buying and I'm not selling. You have to sell equivalently. Or you're selling outside the system, because that's what we do. We sell outside the system. So if you're selling outside the system will know. One day, the system will bring this data together. Yes.
Amazing. What are the common deductions or incentives available to businesses in Kenya to reduce their corporate tax?
Yes, that's a very good question. So, first of all, the deductions is what I mentioned first. The allowable deductions are your purchases and your expenses. So you have to demonstrate very well. So if you have rent of 4 million per year, you have to have rent receipts. So that is one of the main deduction of your sales is your purchases and your expenses. So, and you have to demonstrate them very well. So you cannot say the full year fuel, like I've done 2 million. No, you have to have that data there with you. So, and for organizations that are able to carve their data properly, they are able to really reduce their corporation tax. So we have other now incentives that are capital allowances. So capital allowances could be wear and tear. So if you're having assets, you can recognize wear and tear. You can also do an investment. The investment that you can have capital deductions. So you can invest in an industrial building and build an industry. And sometimes you find the multinational companies and many corporations that are quite big, they really get a lot of tax incentives. So you build an industrial building, you can build a pack house, you can build a warehouse, and you can get so many incentives. You can buy a plant, a machineries, their deductions. And of course, those deductions and allowances, you have to go through audit for you to be granted. So there's a formula for you to use. Bad debts. We have a lot of bad debts. So every year, you're having people that don't pay you, but you don't recognize it is an allowable expense. So you can recognize those bad debts. You can demonstrate. You have to demonstrate that you tried to recover without success. So most of the time they will say about 3 years, and you have to show. So these were the auctioneer letters, legal letters. These were emails that we went there, and then so you have to show how you concluded that this money is not payable anymore. And you can demonstrate. Imagine, for instance, I give an example of companies like an animal feeds company. Most of those companies, they have so many bad debts. You find you're selling to farmers. So the farmer will take your feeds, and one time they tell you, we don't have chicken. The chicken, the chicken died. So you keep following, and possibly that person will not even ever pay you. Recognize that money. For instance, if you recognize even 5 million, you've saved 30% of that 5 million. Yes. So it is very, very important. The other you can recognize interest income, interest expense. Also, I see so many of us leaving it out. Interest expenses on loans. So the bank loans that we receive, there is an interest expense. So get your bank statement or their loan statement, recognize that expense. So Mostly for you to lower your corporation tax is on documentation, proper documentation, having the correct tax advisor or the auditor who is, by the way, where we are headed because of the tax surveillance and compliance and KRA really being tough. You have to have an auditor who understands tax. Otherwise, there'll be mismatch. So they have to understand what they are presenting, the implication that is giving your organization. So having the correct person who can advise you, and bookkeeping systems, accounting systems. Nowadays, having a business that you're doing 10 million a year and you're saying you don't have, I have manual documents. That doesn't work. So you have to have softwares, accounting softwares, QuickBooks, and others. You have to incorporate, you have to accept now to incorporate them in your organization. Otherwise, you'll not be able to even make money. Yes. Yes, even making, because also something that I mentioned, we are operating at a very tight economic environment. Businesses are not making money, and you have to operate that business. You have to have staff. You are doing sales. Operating a manual business right now is the hardest thing possible. How do you monitor like salespeople? How did they sell? Did they bring the money back? How are their credits? How can you manage such on books and Excel sheets? You cannot. You have to incorporate an accounting software that it can tell you, before we invoice this person, there is a debt here he has not paid and it is due. So let them pay this money first. And then, for instance, if you're having checks coming back or M-Pesa, people paid M-Pesa in the field. How do you recognize that M-Pesa on the system? So right now, operating a business without proper structures. When I visit most of the organizations, I see organizations that are due for growth, that they have a big idea and they have every opportunity for growth is there. But the management process, the processes, the accounting structures, how they are selling, how they are bringing back the money, how they are spending, how they are doing LPO. There's a lot of area around there causing them not to grow. Yes.
Oh,
yeah.
Amazing. I hope our viewers, you're following keenly. Thank you so much, Dr. Regina, for enlightening us. You have heard that bookkeeping and documentation is very important, even when a business is small. It will grow. We don't start businesses for them to fail. We start them for them to grow. Thank you so much. I want us to take a very short break and then we'll be right back after this. See you.